Burgess & Bolton's weekly wrap-up.
Good afternoon, everybody, and welcome to a special show for the Burgess & Bolton weekly wrap-up. Every now and again, we're going to take a deep dive into one particular topic, and this week we're going to play the first part of a two-part interview with David Law and Katrina Samen, who are both from Savills and operate in the insurance land, EC1 part of the city. And they're going to give us a bit of an insight into their reflections on the COVID crisis and perhaps what the shape of the office is going to be like going forward.
Yeah, I think this is a totally prescient interview, and I think anybody listening to this will find it absolutely fascinating. You couldn't get two more experienced people, I think, Jeremy, to talk about this. David has 30 years in the insurance market, in particular, working in commercial property, and he just knows that market back to front. Just a few kind of highlights before we start the sort of coverage. I think first of all, David does talk about the point about where we are now with COVID, that the shift in the marketplace, the commercial property marketplace, the insurance marketplace is unprecedented, even compared with any other of the big financial events, such as the financial crash and so on. So this is, for him, as he describes it, uncharted territory. I think that the other interesting thing that we then move on to in the interview is where they talk about how the future is unthinkable, as they see it, without some kind of office space, some people being in an office physically and working in person. They are absolutely adamant that that collaborative working will come back, and I think that's incredibly important, and they evidence that. And then we move, I think, on to some of the possibilities for the future, and that will be developed then within the next part of this interview. There are two reports as well that Katrina refers to, which are well worth picking up. I've had a look at them myself and read them, and we'll be producing some articles around this. The first is Time to Transform, which is a KKS Savills production, and that is all about the workplace post-COVID. So it's a very up-to-date report. Its subtitle is Trends, Predictions and Facts, and that's exactly what it gives you. And some of the things in that report Katrina refers to, but there's plenty more in the report. So we'll provide the links to that on the Bolton & Burgess website, on our LinkedIn, and as a handout later. The second report is Savills Office Fit. This is a wider report from Savills. The subtitle of this one is The Office is Vital but Needs to Change. And this is the report that really Katrina is referring to, I think, when she's talking about the things that they have been talking about and the accelerating change that she sees coming now in the marketplace.
Great. Well, thanks, Ben. We hope you enjoy this. So here we are, part one of our two-part interview with David and Katrina from Savills.
Welcome, David and Katrina, to today's interview. Delighted you could make it. Just to kick things off, if you could just give us a quick intro and just tell us kind of your role and kind of what you do at Savills, that'd be great.
Sure. So I'm David Law. I'm a director in the city agency team at Savills. I've been a city agent for 30 years, most of them at Savills. And my specialism is the insurance market, where I represent occupiers on relocations and landlords on redevelopment of buildings. And Katrina is a colleague of mine, recently joined when we purchased her fabulous architectural practice.
Amazing.
Thank you, David. My name is Katrina Kosik-Samen, and as David said, recently, in fact, 1 year ago exactly, I sold my business KKS Strategy to Savills. We trade under the brand name KKS Savills. We're an independent architectural and design studio, and we specialize in the commercial real estate market for leading sectors in terms of insurance, banking, law, and also a specialism in research for around the occupier and workplace trends. We've done quite a lot of insurance work in terms of strategy and fit out for Aon, Hiscox, for Liberty, for Axis. So we've worked both on the base build side as well as the actual user fit out.
Great.
And our agency client list, mirroring some of those names: Munich Re, Brit, JLT, Amlin, Chaucer, Ascot, Lockton, Hyperion. We do act for an awful lot of your sector. So we're relatively well known out there. If anyone's moving property, they may well have come across either one of us.
Brilliant. Thanks very much for that. That puts it all in context. So perhaps just moving on to the kind of the current crisis. In sort of your opinion, where were we kind of pre-COVID? What were the trends pre-COVID, and where do you think things are going now, especially as you just laid out within the insurance kind of sector?
Yeah. Well, we were in a raging bull market pre-COVID. It was running short of space. Rents were going up. Landlords were getting very ambitious and greedy. Brexit tempered that slightly, but not much. And just to give you a flavour, we're expecting rents this year to rise between 5 and 10%. And we've come out the other side of lockdown, literally in the opposite direction. It's a very nervous market. Landlords are, in certain cases, choosing not to build out development schemes. Every single occupier is reconsidering not only the space that they were looking to acquire, but the space that they're currently sat in. It's really fair to say it's uncharted waters. I've never seen anything like it. I mean, as I say, I've been doing this 30 years, and GFC and .com were very different. They were sort of you could point at the culprits. There's no culprit here, and it's a real head scratcher what's going to happen. So I will try and give you some insight, but I don't think anyone actually knows.
No.
And Katrina, during lockdown, we did massive surveys of all our occupier clients, and trying to help them see through this, how they're going to occupy space into the future. I know Katrina's got a huge amount she could say on that, but from a market point of view, it's really shaken the property market. I mean, the retail sector's completely blown out. Hospitality's, there's no rent flowing. The office sector is slightly more robust, but I can see it being a very, very tough market for quite a long time, actually.
So you wouldn't be able to, in your opinion, compare it to other, big events, financial crisis or, the .com or whatever else. This is just completely unprecedented.
We do. I mean, we are looking in the rearview mirror all the time at those crises and what happened. I mean, GFC was interesting because it was a very, very steep cliff that we fell off. And you had Lehman's going bust, Bear Stearns going bust. So you had million square foot buildings coming to the market because the businesses just didn't exist anymore. With this thing, it's completely different. We haven't actually seen a big corporate casualty yet. I mean, and focusing on your sector, there's obviously some weakness, but there's no casualty yet. So the space that's coming back to the market, what we call sublet space from tenants, it's pretty. I mean, there's 1 million feet of it that's come through in central London over the course of lockdown, which sounds a big number, but it's not really in the relative terms. And we expect that to increase after furlough ends, some redundancies coming through. I think, the sublet space will continue through the end of this year and into next year. So the market is filling up with space, which it didn't have before. But as I said, when we went into lockdown, it was a very strong market. There was very low levels of supply. So this new sublet space isn't necessarily going to tilt it into an oversupplied market. I think what will really shift the market is the demand side, because we just don't know who's going to be able to go and take new leases. I mean, the larger occupiers, funnily enough, are what's keeping the market going at the moment. Deals that we call pre-lets, where large occupiers commit to take buildings that are either being built or haven't yet come out of the ground. So it's a commitment to take a building when it's finished. Those deals take 3 years, 4 years to bring about. And if you're over 100,000 foot and you've got 1,000, 2,000 staff to move, you're a bit of a juggernaut. You have to keep going. And those deals are still happening. But the day-to-day market, the sort of 50 to 200 staff businesses, they're just trying to work out how big they are, what their business is going to do in the future. And it's very difficult for them. So a bit of there's a head scratcher.
Is there a kind of hierarchy of businesses? Because I think from our perspective, my business's perspective, one of the things I keep saying to people when they ask, "Are you going back into the office?" is, "Well, I'm waiting to see what the big players do, because until I know that, I don't really know how to organise my team."
I mean, Savills have been back in the office for 4 weeks now. We did the red yellow team at first, and we're now pretty open to everyone coming back. But to be honest, whenever I've been up to the city, and you can see I'm not in the city right now, but it's only really construction workers and estate agents who are up there. None of our
we've been open, David, for 10 weeks.
Right.
Yeah.
And we thought it was really important to get back and to be open for business, to show our clients we believe in the office, we believe in our people, we believe in our brand. Our brand, what we do as designers and many other industries that are really collaborative and team-based, really need to be together for at least a period of time or at moments. And we thought it was important both for the mental health of the young professionals who are desperate to come back, who have small flats or gone back home, to those that really needed to be as a team and keep that collaboration and the creativity going. So it wasn't easy, but I thought it best to walk the talk. I advise on this, I research on the subject, and I think we needed to do it. So it's been really great, actually. I do love being back.
This is a particularly interesting area and something that we've talked about on the show quite a few times, haven't we, Ben, about this, about the way that insurance companies are thinking right now. And it seems to be quite short term in terms of cost cutting and looking at their operating model post-COVID and perhaps reducing the amount of office space they have because of the success that they've had from work from home. Whereas a kind of a medium to long term approach, is much more in your space where organizations need to collaborate in order to drive innovation. And I think there is a danger that this short-sightedness might
it's really quite amazing, because as I've been doing this a long time, and I've spent 30 years trying to get insurance and brokers and underwriters as close as possible physically within a tiny part of London. That core EC3 market is tiny. And I've spent my entire career trying to pack them in so they can get to see each other as soon as possible and as easily as possible and as comfortably as possible. And now suddenly they're all saying, it doesn't matter. We can do it like this. I can see you guys here, and that's fine. I just don't believe it. I mean, I really don't. I think that industry absolutely thrives on socializing, face-to-face interaction, nuance, all the stuff you cannot do like this. And also, I don't think you can sell like this. And, a large portion of insurance is actually sales. And I just don't think it's possible. So coming back to the original question, are we being led by the big guys? Yes. I mean, Lloyd's isn't open until, was it the end of August? So September seems to be the return date for most of my client base.
Yeah.
We're still doing an awful lot of work with them, but it's all remote. There's very few of them. In fact, I'm struggling to think of one who's actually back in the office. But there is this intention that in September, things are going to have to get going again for the renewal season, which, it's normally frantically busy walking the streets. And is that really going to change? I mean, it seems unlikely to me.
With, your ambition, Katrina, which is very much, about the people and talent and your brand.
Yeah.
I can imagine lots of insurance people, and this may be unfair, saying, well, in their kind of numerate environment, saying, I don't really understand those things. I don't really get those things. They live in the world of spreadsheets, and I don't want to simply oversimplify the issues, but it does feel like your approach is quite different from a lot of people that I've spoken to in the market. They partly maybe because there are cost issues in the market that are constantly driving these businesses at the moment.
I think what I would call what's happened is really an accelerator. What has gone on has actually just accelerated everything that I've been preaching really for the last 15 odd years. I'm trying to work with organizations to think differently, think out of the box, not think about me, myself, my isolationist in a large office for hierarchy, for title, but to think about it as a place to be collaborative, work together, not worry about the title so much, do what you need to do, work where you want to work. And this has just pushed everybody forward. So those firms that we were able to successfully move that way have benefited from reduction in real estate already. They've got the right tech to allow people to be agile. They've got the right policies and occupational health risk assessments. So they're able to, within a matter of moments, correctly put everybody working from home. Many people obviously didn't do it, couldn't do it, felt that they weren't able to do it. But you know what? Genie's out of the bottle. It isn't going back. So we have to just deal with the accelerator. But there's many issues that will come out of this in 6-12 months, not least to mention, as I said, the occupational health. People were sent home without the right desks, the right screens, the right printer, etc. But the mental health too. And it's interesting going back to what we were just saying, because I sort of very loosely categorize in the insurance world, there's sort of a third, where a third of the certainly the underwriters, they are the extroverts. They go out and make deals. They need to be with people. We know the extroverts are suffering as a broad statement because they're not having the lunches, they're not having the dinners, they're not having that beer around the corner, they're not seeing the whites of the eyes, they're not going to get the business, and they're really, really struggling. The benefit of this has actually been that the introverts who before would kind of get swallowed up by the extroverts in the office now have a voice. Everybody has an equal voice on a Zoom call or a Teams call because you're in there together. I think the difficulty will be is when we're half and half, and I see that already, is that I have a third of my team back. We're a studio of 32 people. I consistently have about 12 people back at any one time. More are starting to come back, and I'm actually implementing that all staff need to get out of their bubble of fear one day a week, because I think it's healthy to get out of something you have created around you. As long as you're safe and have no medical condition, there's no reason that you shouldn't try to move your life on. I was always taught that, terrorism or terrorist or something can't hold you captive, and that's exactly what people are doing. So if you move beyond that and you start to open up your world, I think it's really important not to forget that the extroverts need this. The introverts had a value, but when we're half and half, is that the people on the screen, if the people in the room are the majority, will start to fade off, or the ones that are in the room were able to solve those problems quicker than the ones on the screen. And what's the hardest thing that we're going to find is the technology, because you now have to have what I call, double kit. You're going to have your laptop and your headset, everything at home and everything in the office, because what if you forget something and you can't connect? And everybody's now used to a video call rather than when the phone rings, you're like, what's that doing? I can't see you. Why can't I see you? So I think the technology, but Lloyd's is really was trying to push that forward with their initiatives last year. As you all know, they were on making sure that after the 330-year history that they were going to go innovative and digital, and they were going to promote all of this. So I think this is just an accelerator that the insurance world had to catch up with anyway. For me, it's a wonderful opportunity.
That's the other, big elephant in the room, what Lloyd's are going to do. Because Lloyd's, it's a market, it's a building. Obviously, the regulatory function is there, but what they have a break coming up in 2026. They have a lease break. They also had one in 2021, and I was involved in some conversations they were having back there where they were going to close the Lime Street building and move somewhere else. I think they were doing that quite lightheartedly, but I think this time around with Blueprint, 2026 looks like, it could be in a very different form, and I think highly likely to be in a different location. So the advice we're providing to our insurance clients is also around that. What happens if Lime Street becomes, I don't know, Billiter Street or somewhere else? It's because that has always been such an important driver. Katrina and I both put people into the Scalpel because it's right by Tower 1, and it's not the best building in the world, but it's a fantastic location, and people have really gravitated towards it. Similarly with 22 Bishopsgate coming out, there's a great back door from that scheme to the Lloyd's market. But if Lloyd's was 100 yards east or south or somewhere else, that has an impact on, or it traditionally has had an impact on what all these folk think. So there's an awful lot that they're having to grapple with in real estate terms.
But I'm kind of reading, maybe I'm reading this wrongly, but what I think you're both saying, partly because of your experience in business and how you run businesses successfully, is that you're saying in a sense, we don't kind of capitulate to this. We've got to actually go back to some of the ways we worked because they're really successful and they actually work, and this may be the argument that, people play around with that, of course, everybody's going to be working from home and that's going to, in reality, these are not, they're not realistic, perhaps, and certainly perhaps not for the insurance market, in the end.
I just hope we take the benefits of it forwards rather than, seeing it as some sort of threat. Or there are some real good things that will have come out of this. I just hope they do get carried forwards. And Katrina's team have put out a brilliant document, which is all about that. Let's make sure we do take some lessons from this and improve the workplace, because it's, if you can chop a commute 2 or 3 times a week, that's a healthy thing to do. And if you can work from home when you need to really think about a report or something, then feel free to do it rather than it being something that was sort of frowned upon. But no, I personally, I can't see, the insurance market moving to a work from home basis. It's not that sort of industry in my mind.
No, and I think senior people have said that, and lots of people have said, you brokers have said, it's much harder for an underwriter to say no when you're sitting in front of them. So those sort of comments I think are very meaningful, and I certainly have spoken to a lot of people who I think say, look, we can't sell, as you said earlier on, David. It's incredibly hard to sell. You can do all sorts of kind of administrative stuff with agendas on Zoom and Blue Jeans and all the other formats, but actually in the end it's incredibly tiring. The other thing I was going to just ask you about, picking up on Katrina's point about mental well-being, is there was a piece of research that I saw that said actually shows that people are more valued when they're present. They are generally seen as more valuable when they're present than when they're not at home. Now that could be a double-edged sword, because obviously, particularly for women, if they need to be at home in the current situation, that could be disadvantageous to them and so on. But I wondered if you've got anything in the research that had kind of shown those different effects on different groups of people, because I think that's what people will be interested to relate to, I suppose.
We've done the survey that David alluded to. Is we sent out to 65,000 recipients 40-question survey back in April, and the report has been published now, and it is on the landing website. It's also on the KKS-Space landing page of our own.
Right.
And please feel free to download it. It's got wonderful information and research, and from that, we've just launched a paper that we've written called Time to Transform, and it goes into a lot more research detail rather than the office fit survey results, or more statistical actual facts. But the facts that we found from people was clearly, in terms of demographics, that certainly the sub-30s 30-year-olds were really struggling, and the more we stay under lockdown, are struggling with coaching and mentoring and career aspirations. So in terms of feeling valued, I wonder where the survey sort of came from in terms of, is it middle management to senior management and they need to be seen to be valued?
Yeah.
Or is it the younger generations, which I don't think they put themselves on value? What they're missing is the mentoring, and they feel that their career has stopped completely, just shuddered to a stop. You do miss those ad hoc conversations. You do miss overhearing people. You do miss how a senior person deals with somebody on the phone or in a meeting, and situations, and those kinds of things are really putting a stop on it. So I think the whole value proposition is probably from maybe an older demographic, or trying to aspire.
Well, I think
one.
probably is, but I think it's just, I think to me, it's a very important point, saying that actually, you do need to get particularly your younger talent back to work, because to an extent, if they're not seen, then they may not be valued by their superiors, if you like, and that therefore can't be good for any business, it seems to me.
Absolutely. Well, it's interesting also, funny enough, the older generation, I should say, that the 65 plus that we surveyed were also really desperate to get back to work. So the 18 to 24-year-olds and the 65 plus were the ones that absolutely did not want to work from home 100%. They were the ones more likely to want to come in the office. And again, I think you get the younger ones, you obviously know they need learning, the training, the mentoring, the social. But the 65 plus, there's a lovely anecdote about, I've had my career, I've done my career, I've reached my position, I've made enough money, etc. And actually, I'd like to just give back. I enjoy, talking to the younger, or I like trying something new that wasn't my day job that I was trained to do. And when you're sort of at home, you're not getting those opportunities. So it was interesting to see the two ends of the spectrum very clearly. And I think that there's something to be said for, we were so fortunate with our weather. We got locked down in March. We've had basically 4 or 5 months of lovely sunshine. It'll be very interesting when it's colder and raining and dark.
Yeah.
It's great. I think we've done some research ourselves. We do research in the insurance market, and the brokers that we've spoken to, I think one of the key concerns that those older brokers, those more experienced brokers had, was for the younger brokers. And they said there's no way that they can get the networks. They haven't got the networks now. They can't do the business. They can't do the job because they simply can't meet people and do that. That sort of meeting and networking and getting business done, and they're not learning. So they're saying that, the longer it goes on, the more damaging that is to their businesses and their development. And it's very interesting to listen to them, which we did when they talk in detail, because you realize this is sort of innate knowledge. It's not something necessarily they would have spoken about or is written down, and I think it's probably time that the insurers at the senior level needed to get onto that stuff, and they maybe are just talking too much about, as Jeremy says, the cost savings and the the kind of dollar signs and all of this. So
that was part one of our two-part interview with David Law and Katrina Salmon from Savills. Tune in next week for the second part of that.
Yep. Just to give you a little bit of a taste of what's to come in that second interview, David and Katrina really expand much more in the second part on the opportunities and the positives. And I think it's fair to say that this interview goes from what is quite a dark place of where we are currently with COVID and all working from home into one that I think this really paints quite a bright future about, accelerating positives of change. So definitely listen to that if you are wanting to feel uplifted about the world at the moment. I think that would be really good. I just want to remind again about the two reports that were referred to and we'll be referring to. So it's Time to Transform, which is a KKS Savills report about workplace COVID and trends, predictions and facts. And the second wider report is called Savills Office Fit. The office is vital but needs to change. So those two are again, if you're interested, or particularly if you're involved in any way in organisation or management of transformation and change going forward, I think they're well worth reading.
Great. Thanks, Ben. Thanks, everyone, for watching, and see you next week for part two.
Burgess and Bolton's weekly wrap up.